Thank you. I call this meeting to order. Welcome to meeting number 68 of the House of Commons Standing Committee on Finance, and pursuant to Standing Order 108(2) and the motion adopted by the committee on Wednesday, November 16, 2022, the committee is meeting to discuss the report of the Bank of Canada on monetary policy. Today's meeting is taking place in a hybrid format pursuant to the House Order of June 23, 2022. Members are attending in person in the room and remotely using the Zoom application. I would like to make a few comments for the benefits of the witnesses and members. Please wait until I recognize you by name before speaking. For those participating by video conference, click on the microphone icon to activate your mic, and please mute yourself when you are not speaking. Interpretation for those on Zoom, you have the choice at the bottom of your screen of either floor, English, or French. For those in the room, you can use the earpiece and select the desired channel. A reminder that all comments should be addressed through the chair. For members in the room, if you wish to speak, please raise your hand. For members on Zoom, please use the raise hand function. The clerk and I will manage the speaking order as best we can, and we appreciate your patience and understanding in this regard. Members, just before we get to our witnesses, just an update that we will have the Deputy Prime Minister and Minister of Finance, Chrystia Freeland, here on Monday, this upcoming Monday. And now to our witnesses. I'd now like to welcome from the Bank of Canada, Governor Tiff Macklem. Welcome, Governor. And from the Bank of Canada, Senior Deputy Governor, Carolyn Rogers. Welcome. And now we'll hear your opening statements, remarks for the members before we move to questions.
Well, thank you, Chair. It's a real pleasure to be back with Senior Deputy Governor Carolyn Rogers, and we're here to discuss our monetary policy report and our most recent monetary policy decision. In October, we raised the policy interest rate by 50 basis points to 3.75%. This is the sixth consecutive increase since March. We also expect our policy interest rate will need to rise further. How much further will depend on how monetary policy is working to slow demand, how supply challenges are resolving, and how inflation and inflation expectations are responding to this tightening cycle. La décision de la semaine passée reflète plusieurs.
Our decision reflected several considerations. First, inflation in Canada remains high and broad-based, reflecting large increases in both goods and services prices. Inflation has come down in recent months, but we've yet to see a generalized decline in price pressures. Second, and related, the economy is still in excess demand. It's overheated. Job vacancies have declined from their peak, but remain high. And businesses continue to report widespread labor shortages. Third, higher interest rates are beginning to weigh on growth. This is increasingly evident in interest rate-sensitive parts of the economy like housing and spending on big-ticket items. But the effects of higher rates will take time to spread through the economy. Fourth, there are no easy outs to restoring price stability. We need the economy to slow down to rebalance demand and supply and relieve price pressures. We expect growth will stall in the next few quarters. In other words, growth will be close to zero. But once we get through this slowdown, growth will pick up. Our economy will grow solidly, and the benefits of low and predictable inflation will be restored. To put this in numbers, growth in gross domestic product, GDP, is projected to decline from about 3.25% this year to just under 1% next year, and then rise to 2% in 2024. And inflation is expected to hover around 7% in the final quarter of this year, fall to around 3% by the end of next year, and return to the 2% target by the end of 2024. Finally, we are trying to balance the risks of over and under tightening.
Continue to endure the hardship of high inflation. And they will come to expect persistently high inflation, which will require much higher interest rates and potentially a severe recession to control inflation. Nobody wants that. If we do too much, we could slow the economy more than needed, and we know that has harmful consequences for people's ability to service their debts, for their jobs, and for their businesses. This tightening phase will draw to a close. We're getting closer, but we're not there yet. I also want to update you on the bank's balance sheet, which has been declining as a result of quantitative tightening. The balance sheet peaked in March of 2021 at $575 billion, and as of last week, it was about $415 billion, which is a decline of about 28%. The decline primarily reflects the maturity of our repo operations and the reduction in our holdings of Government of Canada bonds following the decisions to end quantitative easing in October 2021 and begin quantitative tightening last April. After a period of above average income, our net interest income is now turning negative. Following a period of losses, the Bank of Canada will return to positive net earnings. The size and duration of the losses will ultimately depend on a number of factors. These include, in particular, the path for interest rates, as well as the evolution of the economy and the balance sheet. The losses do not affect our ability to conduct monetary policy. I would also stress that our policy decisions are driven by our price and financial stability mandates. We don't make policy to maximize our income. The bank's job is to ensure that inflation is low, stable, and predictable, and we are still far from that goal. We view the risks around our forecast for inflation to be reasonably balanced, but with inflation so far above our target, we are particularly concerned about the upside risks. We are mindful that adjusting to higher interest rates is difficult for many Canadians. Many households have significant debt loads, and higher interest rates add to their burden. We don't want this transition to be more difficult than it has to be. But higher interest rates in the short term will bring inflation down in the long term. Canadians are looking for ways to protect themselves from rising prices, and we are working to protect them from entrenched inflation. It will take time to get back to solid growth with low inflation, but we will get there. By working through this difficult phase, we will get back to price stability with sustained economic growth, which benefits everyone. And with that summary, Senior Deputy Governor and I would be very pleased to take your questions.
Thank you, Governor Macklem, Senior Deputy Governor Rogers. As you can see, we have a full house. We have many members and eager to ask questions. We're going to move into our first round, and in that round, each party will have up to 6 minutes to ask questions. We're starting with the Conservatives. I have MP Hallen for 6 minutes, please.
Thank you, Chair, and thank you to the Governor and Senior Deputy Governor for being here. I'll get right into it. In a speech on October the 6th, Governor, you told the Halifax Chamber of Commerce, and I quote, "Inflation in Canada increasingly reflects what's happening in Canada," end quote. And in the lead up to that statement, Canada had already seen $110 billion added to the debt before COVID, $500 billion just in the past 2 years, 40% of which we know had nothing to do with COVID or anything that was COVID related. Now there is $52.2 billion in new spending this year, according to the PBO. Would you agree all this spending is going to add more to fuel this homegrown inflation?
Well, let me say a couple things. First of all, you don't get to 8.1% inflation because of one thing. A whole number of things happened, and as I discussed in Halifax, the initial push to inflation was largely from global factors, higher goods prices, higher oil prices. But as you highlighted, increasingly, the inflation we see in Canada reflects what is happening in Canada. Our economy is in excess demand. It is overheated. Essentially, businesses can't produce as many goods and services as consumers want to buy, and so prices are going up. And why is the economy in excess demand? We went through the deepest recession in history. That was followed by the fastest recovery ever. And now we're on the other side of that. And yes, inflation is certainly too high, and we are committed to restoring price stability.
Considering that the fall economic statement and supplementary estimates B are both containing even more government spending, Seeing as more spending is only going to drive up inflation, is the government counteracting the measures you and the bank are taking?
So with respect to government spending, look, governments, parliaments, those are decisions. Those are your decisions as parliamentarians. What we do at the Bank of Canada is we take into account the government's plans, the federal government's plans, the provincial government's plans. We build those into our projections, and then that feeds into our forecast for inflation, our outlook for inflation, and that is an important input into the interest rate decisions that we take. So the outlook that I gave you and that we published in our monetary policy report a few weeks ago reflects the spending plans of the government.
But Governor, would you agree that you have to change your projections as there's more spending by the government?
I would agree that we take those into account. There are many things going on in the economy. Government's decisions are one of those things, and we take those into account when we take our decisions. When governments add to...
So I'll just a small example. So if there's $52.2 billion in new spending, would you agree that you would have to increase your rate again?
Well, it depends what else is happening in the economy. Look, other things equal, as economists like to say, the more demand... First of all, government actions can have both demand and supply consequences. So, for example, the government has increased the target for the number of immigrants coming into the country. That's going to add supply, it's going to add workers, it's going to add new Canadians. It's also going to add demand because they're going to need housing, they're going to get incomes, they're going to spend them. So we are going to take both those into account. So yes, I mean, other things equal, the more demand in the economy there is, that means the higher interest rates would have to be to bring inflation back to target. Government policies have a range of effects, and we do our best to take those into account. We have a clear mandate, and we take our policy decisions in pursuit of our mandate.
Okay. Just changing gear, at a previous appearance at this committee, you noted that the carbon tax is inflationary, adding to homegrown inflation. The government will be increasing that on April the 1st, 2023, and eventually will triple it to $170 per ton by 2030. How will the increase in the tax increase its impact on inflation?
So in our monetary policy report, I don't have the number of the chart, but in our monetary policy report, there is a chart with our outlook for inflation. And in that, we break out the various pieces. So one of those pieces is the increases in the carbon tax. And there's, as you're well aware, there's a series of increases in the carbon tax. And roughly speaking, they add 0.1% to inflation in each of the years going forward.
So it would be inflationary, the higher it goes.
0.1%.
Yeah,
yes.
But it is inflationary in your opinion.
Adding 0.1%.
Okay. According to Statistics Canada, Canadians' debt-to-disposal income is now at 184%. As Canadians run out of money, you are continuing to raise interest rates as a result of homegrown inflation. 1 in 5 Canadians are skipping meals or cutting back on food. Almost 50% of Canadians say their finances are worse than a year ago. And half of variable mortgage holders have hit the trigger rate. How many Canadians will have to default on loans or miss mortgage payments or not be able to buy groceries before the bank considers the interest rate is too high?
Well, look, what I would highlight is we are acutely aware that high inflation is making life very difficult for Canadians. As you highlighted, Canadians they've been surprised by this rapid rise in their cost of living. And they are finding it, many Canadians are finding it very difficult.
What would be the trigger rate in your opinion?
To cover their bills.
Is there a trigger rate in your opinion?
That's the time, MP Helen. Thank you. And we are moving to the Liberals, MP Zarowitz, for 6 minutes, please.
Thank you so much, Mr. Chair. And I want to say thank you to you, Governor, and to Deputy Governor for being here today. And thanks for your outstanding work during these unprecedented times. You talked a little bit about this during your remarks at the front end. I want to talk to you about a negative equity position. So the Bank of Canada undertook extraordinary measures during the pandemic to put a floor under the Canadian economy and protect people and businesses. Some of these measures has arguably led to the potential of the bank entering a negative equity position very soon. What's your reaction to the concerns that have been raised in the press recently?
Well, in a second, I'm going to turn it to the senior deputy to respond to this in more detail. But as I underlined in my opening remarks, yes, we are, as a result of the actions we took, we undertook quantitative easing. In the first part of the crisis, that created extra income for the Bank of Canada. Now, as interest rates increase, we are starting to incur net interest rate losses. What I want to there are various solutions to that problem, and the Senior Deputy Governor is going to say a word about that in a second. But what I want to stress is that whatever solution is chosen, it's not going to affect how we run monetary policy. We, as a central bank, we are a going concern. We have liquidity, and we will continue to run monetary policy guided by our mandate. We do not run monetary policy to maximize our income. Low inflation is a public good. We run monetary policy to deliver low, stable inflation. Obviously, it will have some impacts on our balance sheet. Those are largely accounting issues, and I'm going to turn it to the Senior Deputy Governor, who is a CPA, to talk to those issues.
Yeah, as the Governor said, we actually expect the bank will show negative equity in the coming months. This isn't a problem that's unique to the Bank of Canada. All of our peer central banks in G7 countries are experiencing the same thing. There's a variety of different options in how to deal with it, though. So, for example, our peer central bank in the U.S., they use U.S. GAAP accounting standards. So what they've done is they will take the negative equity, they will turn it into a deferred asset, and then they will run that deferred asset down over time as earnings turn positive again. Other central banks have, the governments have put an indemnity in place that offsets the negative equity. The Bank of Canada has an indemnity in place right now, but that indemnity covers what we call market losses. So those losses would occur if we were to sell assets. We're not planning to do that. But these are operating losses. So we could, another option would be to extend the range of that indemnity. And a third option would be to change the legislation that would allow the bank to retain its earnings. So right now, the Bank of Canada is required under legislation to return its earnings to the government each year. In a normal year, that would be about $1 billion in earnings. Over the last several years, there's been an additional $2.6 billion that we've returned to government. So a third option would be to change, it would require a change to our act, allow us to retain our earnings, and then over time those would offset the losses. When we were back into a positive position, then we would go back to returning our revenue to the government each year. So this is a decision for government. I know they're actively working on it right now. We expect in the coming future that they will make a final decision.
Okay, thank you so much. And I want to make sure that we give you the time to explain that, because I know that there's a lot of concern in the media. So appreciate you mentioning that other G7 countries are also experiencing this, and really appreciate you laying out those options. So thank you. Governor, you did a wonderful job of articulating where you think inflation is going to be at the end of this year, next year, 2024. Thank you for that. But could you articulate what are the risks going forward that could push inflation higher?
Well, I'd highlight two sources of risk. Look, there is a lot of uncertainty in the global economy. There is a horrific war in Europe. China continues to deal with COVID, with recurring waves resulting in new shutdowns. We can't control global events, and a number of the important prices in our economy, particularly the price of oil, which feeds directly to the price of gasoline, the price of many imported foods. Those prices are determined in global markets, and we can't control those. So there are certainly risks that oil prices could go sharply higher, and that would definitely affect gasoline prices, heating prices, and it would definitely affect headline inflation. I think the other source of risk is we know that service prices tend to be among the stickiest in the economy. Service price inflation in Canada now is running about 5%. The good news is, after rising rapidly, it hasn't moved up further. What we're watching for very closely are signs that it is really starting to come down. We've yet to see sort of really convincing evidence that it's starting to come down, but we are hopeful that that will come as we get into the new year. But there is a risk that the inflation in Canada is more embedded, it's more entrenched, and it proves harder to get down than we expect. There are also some possibilities that things could come down faster. We do think that our forecast is reasonably balanced, but as I said in my opening remarks, when inflation is 7%, you're more worried about the upside risks than the downside risks.
Thank you so much.
Thank you, MP Zerowitz. Now we'll have questions from the bloc. MP Sainte-Marie, please, for 6 minutes.
Oui, merci, Monsieur le Président. Madame Rogers.
Thank you. Hello, and thank you very much for being with us today. My first question, your growth predictions by quarter for the coming year is no growth for the first 3 quarters. Did I get that right? Yes, approximately 0 for the fourth quarter. So that's now, the fourth quarter of this year, and then the first and second quarters of next year. So about 0. It is possible that it could be slightly negative or slightly positive. By the middle of next year, we believe that the growth will be positive. Thank you. I understand that your mandate is to control inflation and that inflation is high. But given this objective, how do you evaluate that the restrictive monetary policy of the present is contributing to the stagnation of the economy for the next 3 quarters? It's not the only factor, but it is an important factor. We have increased interest rates quickly, and we are starting to see the effects, especially on some sectors of the economy that are sensitive to interest rates, such as housing and big-ticket items. As sometimes households purchase these with credit. It will take time because the total effect of our interest rate hikes will affect the economy, but it is an important aspect as to why the economy is slowing. It's not the only factor. The global economy, in our forecast, we have reviewed it as a downward trend, especially in the United States as well. So it's not the only factor, but it's an important one. And honestly, the reality is that the economy is overheating, and we need a slowdown. And then we can reduce inflationary pressure. When you say that the economy is heating up, this is because of the inflation and the labor market. These are the main indicators that lead you to say that the current economy is overheated. There are several indicators for that. You're correct in saying that the labor market and businesses are not able to find enough workers to create all the goods and services that households want to purchase. That's one factor, but it's not the only one. There are several elements in an overheated economy. Another one, what do we see when we look at businesses? They have input costs that are going up. We can see that they're raising their prices more quickly than usual. And so they're passing on these increased input prices to the consumers. So the consumers are seeing a huge effect here, and this reflects an economy that is overheating. Businesses can hand over the higher costs to the households because they're not able to fulfill the demand, so the prices can go up. There are several aspects in an overheated economy, and these are two important ones. With regards to the labor market, many economists are wondering, given the aging of the population, the baby boomers are retiring and are replaced by a new person. One person is replacing two boomers that are leaving. Perhaps there is a structural change, and perhaps the classical indicators of the labor market don't have the same value anymore. Do you take into account this possibility that there's a structural change? When you do your analyses, the same economists will say it's possible that the central banks could have too much of a restrictive policy given this new reality of the labor market. The aging of the population is one of the only things that it's easy to forecast on. Each and every year, we're 1 year older, and yes, it is a factor. It's something that we do take into account. In Canada, we are fortunate because the growth, you're correct to say that the labor market growth is declining because the population is aging, and especially the baby boomers are retiring. But we are fortunate that our immigration rate here in Canada is higher than other G7 countries. This is one reason, and it's an important reason, why in our forecasting the trend line is higher than other countries, even the U.S. Thank you. I'd like to refer to the study that the bank published that has to do with the beverage curve, and you quoted this. The study doesn't seek to make a concrete forecast as to the increase of the unemployment rate, but in the basic scenario speaks about 1.5% increase of the unemployment rate. For the Bank of Canada, is this a good thing if the unemployment rate rises? It's never a good thing when the unemployment rate rises, but at 4.9, at 5.2%, the unemployment rate is not sustainable. The demand is higher than the supply. And so this is one factor that is pushing inflation higher. Inflation will not disappear without action. We need to take action. We need to slow down the economy. And so, yes, this means that there will be an increase in unemployment. We do not think that it will be high levels of employment such as we saw in historic in recessions in the past. Thank you. So this isn't a forecast, it's an analysis, as you were mentioning, of the beverage curve. In history, if we look at recessions, we were talking about increases of 3 to 6% of unemployment. So we think it will be lower than that.
Now we're going to go to the NDP, and we usually go to our standing member, MP Blaikie, who does a lot of heavy lifting and a lot of that mediation work here on this committee. But we have the leader of the NDP, MP Singh, with us, and MP Singh for 6 minutes, please.
Thank you very much, Mr. Chair, and I would thank my honourable colleague for ceding his time to me, and thank you for the representatives of the Bank of Canada for being here. I'll start with just some opening comments, and then I look forward to your answers to my questions. We understand and respect that the Bank of Canada, of course, through you, the Chair, is an independent body, and we believe it should remain that way. We understand that you set monetary policy and that the federal government sets the fiscal policy. I want to direct your attention to something you've already acknowledged, that the decisions being made by the Bank of Canada have real impacts on real Canadians. And I know you know that, but I want to highlight the real impacts. That high interest rates will mean that some families will lose their homes. High interest rates will potentially trigger a recession in Canada, which will mean that workers might lose their jobs. And I will start with some of the comments you made about wages. Since the beginning of the year, I think it's very fair to say that at no point have wages kept up with inflation. And In fact, the opposite has happened, that wages not keeping up with inflation has meant that for most workers, with the cost of living and inflation going up, workers have experienced a pay cut. Yet last summer, you advised employers not to increase wages. And I want to ask you, do you think it's appropriate to tell employers to keep wages low, despite wages not keeping up with inflation, and how this will keep workers even further behind when there is no evidence that wage increases are driving inflation? And coupled with that, why have you never mentioned similarly any concerns around high profits of corporations, but you have referenced concerns about wages potentially going up, which haven't been the case?
Well, thank you for the question, because it is an opportunity to clarify what I said. It's not the Bank of Canada's job to tell businesses what they should pay their workers. It's not the Bank of Canada's job to tell workers what wage they should work for. But it is the Bank of Canada's job to control inflation. And what I said last summer, last month, last week, is that to Canadian workers, to Canadian businesses, is that Canadians should not expect inflation to stay where it is now. And my message was, don't plan on inflation staying where it is now. Plan on inflation coming down. That, we have taken forceful action. The forecast I outlined has it coming down to 3% by the end of next year, 2% by the year after. And look, there are probably going to be new shocks. There will be new curveballs along the way. But our message to Canadians, we are resolute to get inflation back to our target. With respect to the second part of your question on corporate profits, as I was responding to the previous question, there are a number of when your economy is overheated and you've got these inflationary pressures, there are a number of dimensions of that. Part of it is the labor market. As I mentioned, the labor market is very tight.
Profits. You've never mentioned profits.
Well, I'm just getting to another element is the behavior of companies, and I was just talking about that. One of the things we see is that as inflation has gone up and input costs for companies have gone up, they have been changing their prices more rapidly than usual. They've been passing those increased prices very quickly through to consumers. So consumers are bearing the burden of inflation. Companies have been able to keep their margins. And one of the things we're looking for is, we have seen oil prices come down.
You still haven't said the word profit, though.
Well, I'll say the word profit. I mean, profits, as you've observed.
I mean, you're just so easy to use the term. You're concerned about wages, but I don't see that same concern reflected with respect to some significant corporate profits.
Look, our concern is about inflation, and there are many elements.
Well, inflation, isn't it the cost of goods being higher? And some corporations have raised their prices.
And what we're seeing is that businesses are passing on higher costs very quickly to they're maintaining their profits. Overall, if you look at profits as a share of GDP, they are up. A big part of that is that oil prices, energy prices have gone up a lot.
That's right.
The input prices in the energy field have not gone up as much as the selling price, and so their profits are up. But if you look more broad, but my comments are actually much broader than that. The fact that you're seeing companies pass through higher prices very quickly is impacting consumers. And what I would stress is two things. First of all, what we're expecting to see from businesses is that we have seen oil prices come down. We have seen the prices of some agricultural products come down. They're still pretty high, but they've started to come down.
Let's move on to some other topics as well, though.
Okay. It's an important question. What we're expecting, we are expecting to see businesses pass those input price decreases as quickly back down to consumers as we did on the way up.
Interesting. Okay. The other area of concern you raised, or that is going to happen, is that as the interest rates go up, people might lose their home. That's going to be pain, and that decisions you make will cause pain for workers. How much pain is too much pain, or is that a consideration that you make? I guess coupled with that, you've talked about that a higher unemployment rate might be important to bring down inflation. How much unemployment is the target that you think need to be attained before interest rates need to cool down?
Okay, well, there's a few questions in there, but let me just begin by highlighting, look, we are very aware that the actions that we are taking are having an unusually large impact on Canadians. And Canadians have a lot of tough questions for us. and their elected representatives have a lot of tough questions for us, and actually, we understand that. We don't want to make this more difficult than it has to be. And we are really trying to balance the risks of not doing enough versus the risks of doing too much. And if we don't, if we don't do enough, if we're half-hearted in our efforts to control inflation, Canadians are going to have to continue to endure inflation. And that is a cost that every Canadian is bearing. I mean, for the average Canadian, inflation at 7% is costing, instead of 2%, that's costing them about $3,500 extra a year.
Thank you.
So, that's a cost that every Canadian is bearing. We don't want to, and if we don't do enough, they're going to continue to do that. And we're still, if we don't do enough, ultimately we're probably going to have to raise interest rates even higher and generate an even sharper slowing to get inflation back to control.
Thank you, Governor.
So by moving
Thank you, Governor.
forcefully, we're really trying to
Yeah.
avoid that. If
Thank
we
you,
do,
Governor.
Obviously, if we do too much, it's going to be more painful than it has to be. We are trying to balance those two things.
Thank you, and thank you, MP Singh. And that's the time. We are moving into our second round, and welcome MP Scheer to our committee. And you've got 5 minutes.
Thank you very much. I just want to pick up on a line of questions from my colleague, Mr. Singh. You're talking about your message to employers and workers asking for wage increases. And I just want to make sure I understand this right. What you're saying is that inflation isn't going to stick around forever. So before you go and ask for big wage increases, just keep that in mind. You wouldn't want wage increases to put pressure on inflation staying high. Is that a good summation?
I'm saying plan on inflation coming down.
Okay. But when inflation comes down, though, it doesn't mean prices necessarily come down. It just means prices go up slower.
Correct.
Okay, so workers would still lose on the difference between what they're being paid today and what those prices will be in the future. They're not going to drop below where they are today.
Well, yes. Our mandate is to control inflation. We don't have a price level target. We have an inflation target. So we're trying to get the rate of increase of inflation back.
But inflation is defined as prices going up, so they are linked. I just wanted to make that point because your message to employers and workers is to basically exercise restraint so as not to contribute to inflationary pressures. In 2021, the Bank of Canada gave $18.4 million worth of bonuses to its own staff. Were those bonuses, would you consider those bonuses to staff working at the bank contributing to inflation?
Well, I actually think the Bank of Canada has been pretty restrained, but the Senior Deputy Governor can take you through.
It's just a matter of opinion. Do you think they added to inflation? I wanted your opinion.
No, I don't think that added to inflation.
Okay. Have you received a bonus yourself since March 2020?
In fact, I'm per the legislation under which I'm appointed. I have no ability to get a bonus.
Okay. You talked about the bank's negative position. I just want to make sure I understand this properly. The bank is losing money because it has to pay interest on the settlement accounts, and now that the rates have gone up, the interest payments are greater than what the bank receives from the government for the bond rate itself. Is that correct?
Yes. So what we're paying in interest on our settlement balances, which are our liabilities, is larger than the interest we're receiving on our assets, which are largely Government of Canada bonds.
Okay. And who's receiving those higher interest payments? Those would be the large financial institutions that have accounts with the bank?
That's correct.
So the big five Canadian banks would be included in that?
Yes, a bit more than that, but yes.
Okay, but they are included in that.
Yes.
Okay, and so they're getting paid more than what the bank is receiving in the payment. Who covers the delta on that? Is that just, do you just write them an IOU? Do you create more money to pay them? Where does the money come to cover those losses?
Right. So, as the Senior Deputy Governor was just explaining, there are different possible solutions to that problem. It's ultimately a decision of the government how that gets resolved. The government could indemnify us. So in other words, instead of us making a remittance, there'd be a reverse remittance. There could be, the Fed uses a deferred asset accounting solution, or the other solution would be to change our legislation and allow us to basically run a deficit for a period and then use the future surpluses to repay that deficit.
But barring a legislative change, the Government of Canada will have to bail out the Bank of Canada for its need to pay large financial institutions higher interest payments.
The Bank of Canada can continue to operate. There does need to be a solution to this problem, and we expect one is coming.
When the bank was involved in the government bond purchase program, the bank was buying the bonds off the secondary market, but the government was selling them. As the bank was buying them, the government was selling them. Who sells those bonds into the market?
Well, we are the agent of the government of the Bank of Canada. The government issues the debt, so we issue it on behalf of the government
Okay,
of Canada.
so the bank was selling it on behalf of the government and then buying it back. Was the price identical between what the bank was selling the government's bond for and what they were buying it
The prices won't
back
be identical, but they're pretty close because it's a competitive market. We issue, both of these things are run in competitive auctions. There's strong competition, so the prices are, every auction is going to be a little bit different. Because of the competitive process, the prices will be close, but they're not going to be exactly the same.
Can you provide to this committee how much the total value would be on the difference between what the bank sold the bond on behalf of the government and what they bought it back for? Because you may talk about a small difference, but when we're talking about a scale of $400 billion, even half a percentage point would mean tens, maybe hundreds of millions of dollars that would be going in a direct gift to the banks of Canada, the large financial institutions.
We've published
in Canada.
actually all the data on both our issuance and our buy.
One tiny quick question, it's very.
Our buy. So it's all on our website.
When was the last time the Bank of Canada lost money?
The Bank of Canada has not lost money before.
Thank you, MP Scheer. And now moving to the Liberals, MP MacDonald for 5 minutes, please.
Thank you. It's great having you here again, obviously, Governor and Deputy Governor. I'm going to change it up a little bit after today in Parliament. I think that there needs to be more of a discussion on cryptocurrency. And my question is for the Governor. The last time you were here, the Senior Deputy Governor confirmed that crypto is not a way to opt out of inflation. Would you agree with that point of view?
Well, I would certainly agree that, I'm going to turn to the Senior Deputy in a second, but I would certainly agree that even the word cryptocurrencies is somewhat misleading. These are not currencies in the sense that it's very difficult to buy your groceries with a cryptocurrency or fill up your car. And the other nice feature you'd want in a currency is that its value is fairly stable. And the value of these cryptocurrencies is anything but stable. But I'll allow the Senior Deputy Governor to say a few more things on this in a little more detail.
Did you have other questions on cryptocurrency? Or?
Yes, I do actually. Obviously there's been a sharp downturn in recent months, and we've had, I've even had people come up to me in relative the investments that they made, obviously, and it's an interesting topic, obviously, but with these changes, what are these people facing today? Like, are they facing total loss? Where is it at? Can you just give us a little bit of an insight?
I think you're talking specifically about the FTX.
FTX
collapse. Yeah, I mean, I think at this stage we don't know for sure, but certainly, probably like you, I've been reading the coverage on this issue every day, and it doesn't look good. It does look like it will be potentially a total loss for people that were holding assets on that platform. What is striking to me is that we follow cryptocurrency closely. We're trying to understand the role it plays in the economy and particularly in financial stability. I've always struggled to understand how they generate value, but as I read the description of how they have failed, it sounds quite familiar. As I understand it, the trading platform was transferring assets to a more speculative part of the business and to an investment side, and it looks like it took that side of the business took a lot of losses, and so those assets that were supposed to be held in custody for trading purposes on the platform have disappeared. That's exactly the type of thing that financial regulation, in more mainstream financial regulation, has dealt with years ago. So.
Yeah. Well, I know billionaire Warren Beatty says it's basically putting people in a room and handing cash around to each other and getting something in return. But so how concerned are you about the destabilizing effects of, like, what's that do to the markets? Like, if this is such, and what we read is true, the fraud and so on and so forth, Does it have any effect on our normal markets, our normal investments in Canada?
At this point, it doesn't appear that there is a lot of contagion between the crypto trading markets and the more conventional financial markets. That is something that we were watching carefully for, though. The mechanism that tends to translate or sort of transition from crypto markets into the more traditional financial markets is something called a stable coin. It's how you basically translate. As the governor said, you can't buy your groceries or pay your rent with cryptocurrency, so you do ultimately need to turn it into a fiat currency. The mechanism to do that right now is something called a stable coin, and that is the point where the two sort of universes of the financial sector do meet. So there's an area that we pay particular attention to.
So, yeah, the downfalls and potential security concerns, you mentioned regulation or no regulation. Can you just touch on that? What are the issues? Like, what is the major security issue with cryptocurrency?
Well, I mean, I think the two things that we are paying most attention to, one would be the issue that I just described, is any sort of transmission between the more traditional financial sector and the cryptocurrency sector. The other one is consumer protection. I mean, I think particularly in Canada, Canadians are used to, if a business tells you, look, we're going to put your money in custody and it's going to be there so that you can trade and make payments, they are used to having some assurance around that being a regulated form of business. So, you know, these businesses tend to look a lot like things that are regulated, and they pitch themselves as things that Canadians are used to being regulated. So our concern would be that consumers don't understand the risk they're taking. They don't understand the degree of speculation in this business, and as you pointed out earlier, may suffer losses.
Thank you. Thank you, MP MacDonald. That's the time. And now to the block, and MP Saint-Marie, please.
Oui. Comme mon tour, c'est seulement 2 minutes.
Since I only have 2.5 minutes, I'm going to ask both my questions right now. First of all, the current situation of overheating. Would this be generated mostly by tightening the supply rather than increasing the demand? That's the first question. Second question, understanding the imperative of controlling inflation, and this is why we have this restrictive policy. This is generating inequality, could cause an unemployment increase, could be higher among women. Of course, it's the role of the government to reduce inequality. In your opinion, can the Bank of Canada play a role to reduce inequality generated by its restrictive monetary policy? First question, is it a question of supply or demand? It's both. We know that there are many issues with the supply chains, and crops this summer, crops were improved, but last year there were huge issues with crops. So these supply issues are an important factor, and we believe that this will continue to resolve gradually. We've seen improvements already, but there's a lot of work that remains to be done. The other important aspect is demand. And what has happened here is that after the Omicron wave, the economy opened up, and there were no other waves, and everyone wants to purchase services that they were unable to purchase for over 2 years. And with this strong increase in demand, businesses were unable to fulfill the level of demand, and this led to price increases. The tool that we have is the interest rate, and this affects demand. The other policies that can increase supply, for example, is to increase the immigration rate. This will increase supply. It will take time. So we still need to use our tools in order to reduce the level of demand, but the most that we can do on the supply side. Second question was with regards to inequality, the role of the Bank of Canada, allow me to highlight that during the most serious recession caused by the pandemic, inequality was extremely high, and we were extremely concerned that this would have a permanent impact on women, on youth, on marginalized employees. The good news is that with the actions of the government, the Bank of Canada, and vaccines, and so on, we had a very quick rebound, and this reduced the level of inequality by a lot. Women and youth returned to work very quickly, and so these permanent effects should not be seen from most of these people, and that's really important. Now, there are two aspects to inequality. High inflation has a more impact on lower income citizens than those with higher revenues. And yes, by slowing down the economy, it will impact the most vulnerable. We're not pleased about that. The alternative is to not control inflation, and that's not an alternative. Thank you.
To the NDP and MP Blakey, please, for 2.5 minutes.
Thank you very much, Mr. Chair. In the last week or so, Global News has reported that the Bank of Canada has investigated about 6 harassment complaints under its policy in the last 2 years. But I would say that the bank was pretty tight-lipped in its response to Global's questions about, for instance, whether anyone found to have violated the policy is still employed at the bank, and whether those broken internal rules, I think in 3 out of the 6 cases, resulted in financial settlement. I know that the bank referred to privacy legislation as the reason why it wouldn't provide any further comment. But I'm wondering if you believe that that level of protection of privacy is appropriate in a context where Canadians are dramatically increasing their expectations of accountability and transparency when it comes to harassment in the workplace, and particularly in our federal institutions, Hockey Canada being a recent example of where transparency meant that the organization has had to deal much more seriously with the nature of harassment in its organization than if it had been left to its own devices.
Well, I'm going to start, but I think Senior Deputy Governor is going to want to say something in response to this question as well. First of all, let me say I raised the issue of harassment. I was speaking last week at a conference hosted jointly by the Bank of Canada, the Fed, the ECB, and the Bank of England on diversity, inclusion, and equity in economics, finance, and central banking. And I talked about the very unequal effects of the pandemic. I also used the opportunity to underscore the importance of eliminating harassment in the workplace. And at the Bank of Canada, we have no tolerance for harassment. I wanted to make that very clear. That led to some questions, and I'm going to let the Senior Deputy Governor to say a few words about those.
Yeah, I think I want to come at your specific question very directly. I actually think protecting employees' privacy in this situation is exactly the kind of thing you need to do to encourage the kind of environment we want to create. We are legally obligated not to disclose certain information, but I can tell you that what really motivates us is we want to create the kind of environment where our employees feel safe and able to come forward. As the Governor said, this is an organization that, we're an organization that cares deeply about improving diversity in our business. Our business, central banking, financial sector in particular, is not one that's known for its diversity. We are actively trying to fix that, and part of that is creating the kind of environment where employees can come forward. We're an organization of 2,000 people. You're talking about a 2-year period. I would be concerned if we had nobody coming forward. That would suggest to me that we haven't created the kind of environment where people can step forward. So I actually am quite encouraged. I'm quite proud of our track record. I can tell you, as a woman who's worked in the financial sector, I did my due diligence. I would not work at this place if I thought we were an environment that tolerated harassment. I, in fact, wouldn't work at this place if I thought it wasn't an organization who was actively seeking diversity. So I'm quite proud of our track record, and we'll continue to be transparent about it.
Thank you, and thank you, MP Blakey. And that is the time. It was a great answer and great question. So we're going over to the Conservatives. Now I have MP Chambers for 5 minutes, please.
Thank you, Mr. Chair. Welcome back. It's always a pleasure to have you both here at committee. You mentioned in an earlier question GDP over the next couple quarters and it being quite close to potential negative territory. I'm curious, Canada is a country rich in natural resources and a sector that has been quite strong given commodity prices. If it wasn't for the natural resource sector, would we almost certainly be in negative territory over the next few quarters?
Well, the way I can respond is, if you look at our forecasts of other countries, so we do forecast a recession. We think Europe is already moving into recession, and countries, the Eurozone, the UK, they're countries that are importing energy. They're importing most of their commodities, so they're facing a double problem that the stuff that they buy on global markets is costing more, and so they are less well off, and that is certainly affecting their economies, and that's a main reason why they're headed into recession. As you suggested, with higher energy prices, with higher wheat prices, with higher fertilizer prices, these are important materials, commodities that we export. So that is bringing more income into the country, and that is, that is supporting the Canadian economy. And yes, that is something that is built into our forecast.
Thank you. You mentioned that any slowdown might be temporary. Is it transitory? Is that a fair? If we bring back that word. Sorry, I couldn't help myself.
I'm not going to be using that word again. I don't think it didn't work out too well.
You mentioned in an answer to a previous question that inflation now, you previously had said inflation would cost a couple $1,000s a year for a family. I think I heard you today say inflation was going to cost a family about $3,500. Is that, was that?
Well, inflation is roughly 7% now.
Okay.
So, yes.
So that number's increased. We often debate on in this chamber about the best way to help individuals cope with inflation. There are proposals to increase direct transfers to those in the lower income brackets. There are also proposals to provide families or consumers with some kind of energy relief package, as we have seen in other jurisdictions. From your perspective, in terms of having to deal with kind of the outcomes of the decisions that we make on the fiscal side, are one of those two options that are competing worse than the other or more preferable? Or how should we think about that as policymakers?
Well, I'm glad you're discussing it. Look, Canadians are really feeling inflation, and we're very aware that lower income Canadians are it's hitting them a lot harder. And the main reason for that is, look, they don't have buffers, or they have very small buffers, and it's the inflation. It's in groceries, it's in rent, it's in transportation. They're not things that you can avoid, so it is affecting them more. In terms of my advice, I think the advice from the IMF is very sound. That policies aimed at mitigating the effects of inflation on the citizens really need to be targeted on the most vulnerable, and temporary while this is an inflation problem. The danger of very widespread measures is the price system works, and you gotta let it work. That's part of getting inflation back down. So you don't want monetary and fiscal policy to work at cross purposes.
Thank you. We have historically high levels of debt at every major part of the economy: consumers, governments, businesses. We talked about the challenges that households will have with higher interest rates, refinances. I know the bank put something out yesterday. Are you worried that there's not a lot of room left for the bank to move interest rates up before the rest of the stuff starts to break, before the model starts to break, before people can't afford? You just briefly, like, how much room left do you have to move before you're worried?
Actually, maybe you just gave a speech on this the other day, so I'll let Senior Deputy speak to it.
Well, we outlined earlier, in answer to an earlier question, we outlined the variety of things that we're watching as we make our decisions each time. One of them is how rates are being absorbed by the economy. And as we said, we know that for some Canadians, particularly those who are more indebted, interest rates are really biting. I mean, we understand that. So we are paying very close attention. Ultimately, we do need to see the effects of monetary policy pull demand down, and that there is no.
Thank you, MP Chambers. Now moving to the Liberals, MP Chattel, please, for 5 minutes.
Merci beaucoup, Monsieur le Président.
Thank you, Mr. Chair, and thank you, Mr. Macklem and Mrs. Rogers, for being here. I have very poor regions in my riding. I visited food banks, and the situation is dire. I won't hide that. It's very dire. But what I'm hearing today is that we're going to suffer right now, but good news is on the way. So we are suffering right now. So when we know that there's a light at the end of the tunnel, it helps a lot to know that this is short-term pain. So could you tell us once again, in simple language, that the measures that you're taking will allow to control inflation, and if I understand, will allow to go down to 3% inflation next year, and that at the end of the year, I would like to hear this once again in simple and clear language. And what is the message? What is the message that you have today for people who are suffering? First of all, yes, the economy is slowing. We anticipate that growth will be about 0 for 3 quarters. And during the we're now in the 4th quarter of this year, and then for the first 2 quarters of next year. The second part of the year, in 2023, will be a return to growth. And at the end of next year, inflation should be around 3%. Right now, we're at 7%, more or less, and we anticipate that it will stay quite high for the rest of this year. It will start to decline next year. We expect to reach 3% by the end of next year, and then eventually 2%. It will take time. What we're seeing is that monetary policy is starting to have an impact. We see the impact in sectors that are sensitive to interest rate. Inflation hasn't really gone down, but it is more stable, and we believe that we will see this next year. So all the actors, not just legislation, but the bank and other sectors, I believe that the right thing has been done and that people are aligned to resolve this issue of high inflation, in your opinion? We're not yet there. It's important for our competition system to work better. One aspect that we see right now is that businesses are able to increase prices and to pass on these high costs to consumers. When inflation is low, when the economy is in a more normal state, businesses don't want to hike their prices because they're afraid of losing a sale, that the consumer, that their clients will go to another business. The problem with high inflation is that everyone is seeing that prices are going up, and businesses are not at all afraid of losing a sale. So one aspect of lowering inflation is that competition has to be working better, and this keeps inflation low. One of the points that was mentioned earlier was the aging of the population. This creates a labor shortage, and so we will try to increase immigration to try to replace this, but the retirees are not going to stop consuming, as immigration will lead to higher consumption as well. So do you think that really investing seriously in the creation of high-paying jobs, well-paying jobs, is a good strategy? Because we're always going to have pressure. Well, it's always better to have a better job, of course. But I think that what's important for us to understand here is the effect that it can have with higher immigration for Canadians. And technology is playing an increased role in almost all sectors. And productivity leads to higher wages. When you have higher levels of education, when your business is investing in better tools, workers are more productive and wages go up. Education is under the jurisdiction of provincial governments, but it also has an impact. Training is the responsibility of businesses as well, especially when we have a very tight job market. It makes sense to hire people who are perhaps not quite at the level where you would want them to be, but with this job market, they will have to train. They can hire people and provide training and opportunities to the employees that you already have to upgrade and to train.
And now, members, we're moving to our third round, and we're starting off with the Conservatives. MP Morantz for 5 minutes.
Thank you, Mr. Chair. Governor, there's a couple of areas that I want to explore with you. And one that I'd like some clarity on is this question of, you've explained that quantitative tightening is designed to reduce inflation, but you maintain that quantitative easing wasn't the cause of it. And I want to bring you back to the testimony you gave on November 1st to the Senate, where you were asked a similar question about this, and you went into interest rates. You said that quantitative easing was simply a tool of the bank to control interest rates. But the trouble I'm having is that there seems to be an incoherent, sort of an inherent conflict between these two positions. How can you on one hand say you're relying so heavily on quantitative tightening to get inflation under control, but you won't go so far as to say it was quantitative easing, the creation and expansion of the money supply, that was a major factor in causing inflation?
Well, I don't think there's any contradiction. What quantitative easing does is, so first of all, I underline that our primary instrument, whether we're lowering interest rates or raising interest rates, our primary monetary instrument is the interest rate. Quantitative easing and quantitative tightening are complementary tools. What quantitative easing does is, and you know, when you can't lower your policy interest rate anymore, you have to find a different way to lower interest rates, and that's what quantitative easing does. It pushed interest rates further out the yield curve down. Quantitative tightening, so we're now, our primary instrument is interest rates. We're raising those rapidly. We're also using quantitative tightening. That is complementing the increase in our policy rate by pushing up interest rates further up out the yield curve.
So I just have a limited time.
I don't see that there's a contradiction.
So, okay, so just simply put, do you think that quantitative easing was a factor in increasing inflation? And I want to bring you to Professor Ambler's point, which he basically said, why won't the bank admit that there's a causal relationship between quantitative easing and inflation? Because it seems like a fairly straightforward question for an economist.
Yeah. So I think...
Is there or not?
I think quantitative easing was used together with lowering interest rates and exceptional forward guidance. That package of monetary stimulus was very important in delivering a very strong recovery. With hindsight, if we knew everything a year ago that we knew today, yes, we probably would have started tightening monetary policy sooner. I would remind you that we ended quantitative easing more than a year ago.
Okay, I appreciate that answer. Now, there's another aspect to this, which I want to talk about, which I haven't been able to get clarity on from the bank either, and it has to do with government stimulus spending. We've had a unique event happen in terms of the government's fiscal position over the last 2.5 years, which is they have borrowed an additional $500 billion, ballooned the deficit from $725 billion to $1.2 trillion. Doesn't that event in and of itself become a factor that would cause increased inflation?
So,
is it a factor? You said there was a number of factors. I'm asking you to parse that one out. Is it a factor in increasing inflation?
The fiscal stimulus, together with the monetary stimulus, was an important factor that generated the very strong recovery. And certainly from a monetary policy perspective, as I've already indicated, if we knew everything today, a year ago that we know today, yes, I think we should have started tightening interest rates sooner
Do you think if
withdraw
the government,
the stimulus.
for example, if the deficit spending had been half of that, $250 billion instead of $500 billion, would inflation have been less?
There would have been less stimulus in the economy.
Could you repeat that?
Yes, there would have been less demand.
Yes, it would have been less?
Yes.
Okay, thank you. Those are my questions.
Thank you, MP Morantz. And now we're moving to the Liberals, and I have MP Damoff. Welcome to our committee, MP Damoff.
Thank you, Chair, and thank you for letting me come and visit today. Thank you both for being here. Governor, if I'm not mistaken, I heard you say that the price on pollution, the impact on inflation was 0.1%. Is that correct?
That's the contribution to inflation, our estimate going forward each year. So that's correct.
So by my math, that would be 1 cent on every $10 that prices go up, if it's 0.1%. We know, this is just an example, lettuce right now, you can't find it. And if you can find it, it's extremely expensive. And that's because of droughts that happened in California. I'm just wondering, can you tell this committee, is there a cost to our economy and an impact on economic growth to these extreme weather events like drought and flooding and wildfires?
There's no doubt that we are seeing, with increasing frequency, extreme weather events, floods, forest fires, heat waves, and those are affecting people's lives. They're affecting people's livelihoods. I think the other thing we're seeing is that, go back to BC. A couple summers ago, we had that. You had the drought, then you had severe flooding. Well, the infrastructure damage caused by that, it's still being repaired. Roads were knocked out, bridges were knocked out. So the other effect that we're seeing is that this can disturb supply chains. More recently in Europe, the Rhine was very low this year. It was very dry. That was creating shipping bottlenecks. Now the Mississippi's been, more recently, the Mississippi's been very low. That's creating shipping bottlenecks. So there's no doubt that these things are having very significant local effects on the citizens, but they can also have broader economic effects on harvests, on supply chain infrastructure. So that is something that really speaks to the importance in investing in transition, but also investing in adaptation and mitigation.
Thank you. We heard the term used earlier, homegrown inflation. I met recently with Emily O'Brien, who founded Comeback Snacks, which is a gourmet popcorn company with a purpose. I didn't realize that sunflower oil is used to make popcorn, and that comes from Ukraine. And so she's had trouble getting sunflower oil. Now the U.S., the corn crops have been turned to sunflowers to meet the demand for sunflower oil. So not only has she had difficulty getting sunflower oil, but also the corn to make the popcorn. So she is concerned that she's going to have to raise her prices. All of those are events that have happened beyond our borders. So when we talk about homegrown inflation, I'm just wondering, is Canada the only country being impacted by inflation? How do we compare with other countries like the US, the UK, the EU, and others?
Well, to respond directly to the second part of your question, I mean, if you want some numbers, inflation in the UK is 1.1, in the Eurozone 10.6, in the US 7.7, Germany 10.4, France 7.1, Canada 6.9, Japan 3.7. So, I mean, with the exception of Japan, you can see all those countries, inflation is high, and I can also tell you that it's broad. It tends to be higher in Europe because they have been more affected by the kind of supply chain disruptions that you talked about in Ukraine, and the energy price increase in Europe has been much bigger than in North America, particularly for natural gas. So yes, this is certainly a global phenomenon, and I think that largely reflects the fact that we've all gone through the pandemic at almost the same time. Our economies, plunged into deep recessions. Fortunately, the actions taken globally have supported strong recoveries, but we now are on the other side of that. There's war in Europe. A number of these economies are overheated. Supply chain disruptions continue, and so you're seeing inflation around the world too high. I mean, that doesn't do Canadians any good, though. I mean, Canadians are living today with inflation that's too high, and we've got to get it down.
Thank you, and I only have 15 seconds left, so I will end it there. Thank you very much, and thank you, committee members, for having me here.
Thank you, MP Demoff, and you're welcome to be here anytime. We've got now the block. MP Sainte-Marie for 2.5 minutes, please.
Oui, merci, Monsieur le Président.
Thank you, Mr. Chair. In an article of the Globe and Mail on November 21st, written by two ladies, they refer to a practice of at least two of the large Canadian banks, TD and CIBC, and possibly the Bank of Montreal. That is, when they do mortgages, they allow their clients in trouble to put on the mortgage amount the part of the monthly interest rate that the client is unable to pay for the month. And so the total value of the mortgage is going up. And in the same article, they say that there are an increased number of mortgages that are being reimbursed over a period that is over 30 years. What are your comments as representatives of the Bank of Canada? We are not the regulators of the consumers, and I believe that at a higher level there are some Canadians who purchased their houses at the peak with a variable rate mortgage, and right now with the strong interest rate increases there's a huge impact on them. I think that when the banks are trying to help their clients to find a way of not losing their home, it is a positive thing, but we don't want banks to create new risks. These are questions that should be asked to the superintendent of the banks.
I was just at a meeting today. The governor wasn't at this meeting, but with the Financial Consumer Agency of Canada, who is the regulator that works with banks on how they treat their customers on these issues of fairness and stuff. And I can tell you they are actively monitoring this issue. So, on one hand, it's encouraging that banks are working with clients that are under stress and making sure that they find ways to help them make payments. But, we don't want them to get sort of in the long term further into debt. And so.
Merci.
Yeah.
Merci, MP Sainte-Marie. Now to MP Blakey with the NDP for 2.5 minutes, please.
Thank you very much. I was just wondering if you can help us kind of locate the inflationary demand in the economy. We talk a lot about this, but we know that, for instance, this year, 1.5 million Canadians have been using food banks, right? So presumably these aren't Canadians that are causing inflation. We know that a lot of Canadians are now having trouble paying their mortgage. They don't have a surplus of funds that they're using to bid up the price of consumer goods. And so, when we talk about whether it's, government money being pumped into the economy that then is spurring inflationary demand, or we talk about the role of corporate profits in spurring demand and, investment spurring demand, where are the areas of inflationary demand? Because I think a lot of Canadians, when they hear the kind of talk around Parliament Hill, think, well, like, I'm not bidding up the price of goods at the supermarket. I'm just trying to keep up. So, how does it, whether it's excess corporate profits or it's certain kinds of government spending, like, how does that translate into higher grocery prices or a higher housing cost? Where does that inflationary demand manifest in the economy, and who are the people or the organizations or the corporations behind that inflationary demand?
Well, as I've tried to outline, you don't get to 8.1% inflation because of one thing. It's multiple things. But where is the excess demand? Where are the price pressures? I mean, look, the fact is inflation. Yes, it was 8.1. It's down to 6.9, but it's still 6.9% inflation. Where is that coming from? Well, the first part of the inflation really came from global goods. And what happened? Well, we were all at home all day. Canadians were at home all day. They couldn't get many of the services they wanted. They wanted more space. They wanted bigger houses. They wanted home entertainment, home gyms. They couldn't use services, so they substituted into goods. At the same time, the global supply chain was really gummed up by COVID, so you got this big increase in demand, limited supply, and you saw a really unprecedented increase in goods prices, global goods prices. Those have started the rate of inflation in those has started to come down. Shipping costs have come down, some commodity prices have come down, and consumers are shifting. Now, as things have normalized, they're shifting out of goods back into services. Now, services, there's really excess demand. Households have, the economy's reopened quickly. People really want to buy. They want to go to the restaurant. They want to take a holiday. They've actually built up. A lot of Canadians actually saved a lot of money during the pandemic because they couldn't go on vacation. So they had extra money in their bank account, and now they're spending that. And that, they want to buy more goods and services than the economy can produce, and that is driving prices up. As I said, we're starting to see that's leveled off, and I think our actions have something to do with that, and we are expecting it to turn around and come down, but it is going to take some time.
Thank you, Governor.
Thank
you, Governor.
Important enough. I could just say one more thing.
Sure. Finish.
There isn't one Canadian.
Finish.
There is a diversity of Canadians, and yes, I mean, some Canadians are being really squeezed. We understand that.
Okay, thank you, Governor. And we do like the fulsome answers, and I've tried to make as much.
They're fulsome questions.
Yeah, fulsome. Yeah, yes, that's correct. So we are now moving members to. We got the Conservatives. I've got MP Scheer for 5 minutes, please.
Thanks very much. I just wanted to pick up on a point that my colleague Ms. Damhoff brought up, and that's the idea that that there's global shocks and there's this war in Ukraine that's affecting prices. But correct me if I'm wrong, but inflation was already well above the 3% target before the war in Ukraine. Is that correct?
That's correct.
Okay. You're telling us that quantitative tightening is part of the solution to inflation. Just so I understand, quantitative tightening is when the Bank of Canada allows the bonds that it holds to lapse, basically. That you're retiring that money out of circulation, out of existence in the bank. Is that correct?
So yes, what we're doing is we're allowing the bonds that we have on our balance sheet to come to maturity, and we're not purchasing any more. So our balance sheet is shrinking.
Okay. And is the money supply shrinking in correspondence with that?
If you look at broad measures of money, if you look at M2 growth, for example, it has come down considerably, yes. I mean, that doesn't just reflect quantitative easing, it also reflects the fact that we've raised interest rates a lot, and that tends to reduce money growth as well.
But it's part of the toolkit.
It's part of it.
So quantitative tightening retires the money that the Bank of Canada created to purchase the bonds. But then you simultaneously are saying that quantitative easing, which is the creation of that money to purchase those bonds, had nothing to do with inflation at all. So quantitative tightening has this magical
that's not what I've said.
Ability to
I've said there's-
solve part of the problem that quantitative easing had nothing to do with.
That's not what I've said.
Well, you
What
asked
I've
specifically,
said
did
is-
quantitative
Look,
easing
there-
contribute to inflation?
There
Yes
is
or no?
nothing sort of uniquely special about QE or QT. It is part of our monetary policy response. It complements our interest rates. If you look at all those things together, yes, we put a lot of monetary stimulus in place. With the benefit of hindsight, we should have started taking it out earlier. We actually stopped QE more than a year ago.
With the benefit of hindsight, do you wish you had stopped QE earlier?
Look, I think when we get inflation all back down to 2, I think we are going to have a thorough review of how all our tools worked through this pandemic.
I was looking for
I'm
yes or
not
no.
saying we got everything right. We didn't get everything right.
I only have a
do
couple
think we
minutes
got
left.
a lot
I
of
don't mean to
things
cut you
right,
off. I
and we
only
have some lessons to learn.
I only have 2.5 minutes left, so I just have to move on to other topics. I just want to make sure I fully understand the loss and who's on the hook for the loss. So the Bank of Canada has an obligation to pay in interest payments money to the large financial institutions that have accounts at the Bank of Canada. It's now paying more in interest than it's receiving from the Government of Canada for the rate of the bond itself. And what you've told the committee is that, barring any legislative change, which is hypothetical, in real terms, that loss has to be covered basically by the taxpayer. Is that correct?
So we do need a solution, but what I'm telling you is that the bank will make losses for a period. It will go back to profitability. So provided we can use those profits in some way to
but today you can't, right?
To fill in the deficit. Yes, today we need a solution to allow us to do that. That is correct.
So under the existing framework of the bank, the solution for this operating loss is that Canadian taxpayers will be bailing out the Bank of Canada so that it can continue to pay those interest payments to large financial institutions here in Canada.
Well, we need a solution to this problem.
But barring a legislative change, that is what will happen. Right? We have to deal with the terms that exist as they
I think what's
going
to happen is there'll be a solution to the problem.
Okay. So you're counting on that. That you're counting on something that does not exist today.
That's correct.
Okay. You talked about the inflation being unrelated to monetary policy, but related more to a gap between supply and demand, that supply shrank while demand increased. Would you have to, would you be less dependent on interest rate hikes if the government pursued a pro-growth policy and increased the ability for Canadian companies and businesses to increase their supply? If supply went up, would the pressure on you to raise interest rates diminish?
Well, as I responded to a previous question, there's two elements to getting demand and supply in balance. There's supply and demand. So, I mean, demand is well above supply. The more supply comes up, the less demand will need to come down. I think, given that any actions taken on supply will take time, and given that the economy is clearly in excess demand, there is a need to slow demand. And from a monetary policy point of view, the tool we have affects demand, not supply. So, but yes, I think that, the more governments, parliamentarians take actions that augment the supply side of the economy, the more room there is for the economy to grow without inflation.
Thank you, MP Scheer. And just to finish off this round, we're moving to the Liberals. I have MP Zarowitz for 5 minutes, please.
Thank you so much, Mr. Chair, and thank you for this excellent discussion today. During the pandemic, Governor, you were very cautious about raising rates because there was a concern that if you were raising rates too quickly, that companies were not going to be able to come back. Now, on the other side, I think we're seeing the most dramatic and fastest rate increases in history in this country. And there are those that believe that maybe you're moving slightly too quickly not allowing workers in companies a chance to adjust to these increases and maybe to try to minimize some of the downsides to both. So my question to you is, and it's twofold. One is, how would you respond to this? And the second thing is, how do you weigh the trade-off of risks of the increase of rates between inflation and a possible recession?
Well, thank you for the question. As you've highlighted, we have been raising rates very rapidly. And that is deliberate. And the reason for that is we think the best chance of getting inflation back to target without a severe contraction is to front load the response. And by front loading the response, what that does is one of the big dangers when inflation goes up is that everybody starts to believe that it's going to stay up. And then it's much harder to get it down. By front loading the response, by being very clear that we were determined to get inflation back, I do think that has been helpful in keeping inflation expectations well anchored so that inflation will come back to the 2% target. The other element is that you want to fairly quickly stop inflation from going up and getting it to come down because yes, we're out there promising Canadians that inflation are going to come down, but they're only going to be convinced when they start to see it come down. And by front loading the response, it takes time for monetary policy to work through, but interest rates were very low. They needed to come up quickly to prevent inflation from going higher and start getting it on a downward path. So yes, it has been historically rapid increase. We think that's the best way to avoid having to do even bigger increases in the future and avoid an even more severe slowdown.
Thank you. And then the other question I have is, I believe in an earlier session when you came before us, there was a savings of around $11 billion of what Canadians have put into their bank account. I wonder to what extent you're kind of looking a little bit about where those savings land in terms of maybe some of your decisions. And to what extent you're also looking at other factors like bankruptcy rates of companies and mortgage, like fixed mortgages. I believe 80% of all mortgages in Canada are fixed at 5-year rates. I could be wrong on that, but I think that's what CMHC has said. To what extent do you look at those types of factors in terms of maybe looking to see how fast and how much you might be increasing your rates?
Well, look, we look at all those. We look at all those factors. With respect to bankruptcies, they've actually been very low for the last 2 years. If you look at things like credit card delinquencies, they've been very low. Those things are moving back up to more normal levels. So that's certainly something we're keeping an eye on, but they're not above normal levels. They're just getting back. I don't know if you want to say a few words about the proportion in fixed versus variable.
Sure, and your previous point too about excess, what we called excess savings over what would have been the normal rate. For some time, I think the bank anticipated that savings would eventually be drawn down, particularly once the economy fully opened. We thought maybe Canadians would spend more of that savings. We've since adjusted our expectation. We haven't seen Canadians draw down that savings on a large scale. So in our forecast, we now expect that'll probably stay in people's savings accounts.
I just want to point out something. It seems weird that there's that savings there, but also you're seeing this increase in debt levels of Canadians. It's this really weird contradiction, and how do you explain that?
Well, I mean, as we've said, inflation and adjustments in interest rates both affect. There's no one Canadian, right? So there are Canadians, young homeowners that are just starting out, new in their career. They've just purchased a house. House prices have been elevated. They're carrying large debt loads. Fast forward 20, 30 years, hopefully you've paid down your house, you've accumulated more savings. So the averages can hide a lot of diversity across Canadians. So if you think about the sort of different generations, different households, different socioeconomic groups, there's a lot of diversity. And inflation and adjustments in interest rates don't affect everybody
Thank you. And thank you, MP Zarowitz. And members, I'm looking at the time. I believe we have enough to get through one final round here. And I will be very strict with the time. I know you have very detailed questions and detailed answers, and they've been terrific. But we will have to be quite strict with the time right now for this final round. So we're starting off with the Conservatives. I have MP Helen. Starting with MP Scheer for 5 minutes, please.
Yeah, I just because it was at the very end of my first round, I had asked if you could provide to the committee the valuation of the difference between the bid and the ask price on the government bond, and so we can see how much those large institutions who are involved in the swaps, how much they would have made off of them. I just wanted to verify that's something you can provide to the committee.
Well, the information's all on our website.
Is it there like in an aggregate form?
We may be able to roll it up for you.
Okay, that would be great.
If you have a specific calculation you're looking for.
Basically, cumulatively, if the bank is acting as the selling agent and simultaneously buying it back, the scenario is very probable that a big Canadian bank could have bought a government bond from you, sold it back to you, and I don't know that the banks do anything for free. So I would just be interested if, like they do with currency swaps, when you go and buy a $100 American bill, if you turn it right back and flip it, there'd be a difference. So, but if you could just give us a cumulative...
We can give you the average spread
total?
with the average volume, something like that.
Fantastic. One other thing I'd like to see if you could commit to the committee to providing some information on, and that would be the justification for the rate increases as it relates to cooling demand. So you've raised interest rates now several times, monster hikes that are now cascading through the economy, everything from lines of credits to mortgage renewals. You've indicated it hits low-income Canadians the hardest, and we all know the suffering that Canadians are experiencing right now. You've also said today that the reason for that inflation is the gap between the demand and the supply. You've indicated that supply has fallen and demand has skyrocketed. So we should be able to see some data. We should be able to see some metrics that you can use to justify that. Can you provide this committee with examples of declines in production, declines in output, and corresponding increases in volume of sales? Not dollar amounts, but volume of sales. If what you have said is true, we should either see massive drops in outputs, forestry companies producing far less lumber, farmers producing less food, or a corresponding huge hikes in volume of sales at retailers, at wholesalers, and things like that. So I was just wondering if you could provide the committee the data that you used to justify your interest rate hikes.
Well, we have a wide range of data. It's most of it's published in our monetary policy report on our website. But just to take some specific examples that you referred to. So on the supply side, you can't observe the supply of the economy directly, but what you can observe, just like you can't observe, the labor, where maximum sustainable employment is in the labor market, you can't observe that directly. In the supply side, what you can observe is a whole range of indicators. So delivery times, shipping costs, transportation costs. So we have a whole range of indicators that. And what they show is that the supply side supply chains have been very gummed up. They're starting to improve. So, and we can certainly give you those. On the demand side, yes, you can see the strength of demand, particularly more recently. First, as I mentioned, for goods, and more recently, you can see the strong demand for services.
So you would have that in terms of like volume of units being moved, volume of units being sold.
I mean. We don't create this data ourselves, but Statistics Canada, our statistical agency, publishes a wide range of data. There's also there's also other sources of data we use, and particularly through the pandemic, we've been using some different measures like mobility indices or.
I would just hope that you'd have some.
We can give you all that.
I would just hope that there'd be some specific data points, even if they're from other agencies. Of course, we don't expect the bank itself to have.
We do
this
have
kind
our
of
own surveys, and we certainly share that as well.
For example, Statistics Canada in September indicated that in terms of volume of sales, retail sales actually declined in September, and yet inflation continued to go. Like there's still a higher than target inflation rate in September. So I hope that you weren't just guessing that the reason for these price increases, I understand that you refuse to bear any responsibility as it relates to the quantitative easing that you initiated at the bank as a cause of that problem. And I understand why you wouldn't want to do that. But hopefully that you didn't just look at the economy and say, well, we guess it's a drop in supply, and we kind of estimate that it's an increase in demand. I hope that you would have some very specific numbers to justify the rate hikes, because that is having a very real impact on Canadians, and you should be able to show your work to justify the decisions that you've made.
Just,
Well, I
Governor,
can
in a
assure
very
you
short
we-
answer.
I can assure you we have a lot of analysis, and we'll be happy to share it with the committee.
Thank you, Governor, and thank you, MP Scheer. And moving to Liberals, MP McDonald for 5 minutes, please.
Thank you. Is there anything else you wanted to add? Because you were cut off there, so.
Well,
go right
maybe
ahead.
I'll just come back on QE, because I know there's a lot of interest. Look, we will take full responsibility for our monetary policy actions, but what I want to stress is that there's nothing particularly special about QE, and if you look through history, sometimes QE has been followed by inflation. We're seeing that now. Other times it is not. So after the global financial crisis, the Fed embarked in large amounts of quantitative easing. It was not followed by a big increase in inflation. If you look right now around the world, I mean, what are two of the countries that have had the biggest increases in their balance sheet? Japan and Switzerland. They have among the lowest inflation. In fact, the reason they've had such big increases in their balance sheets is they've been trying to fight low inflation. They've been trying to get inflation up, but inflation's actually been low. So, what the effect of monetary stimulus has in your economy is very dependent on the situation in your economy. So, look, I'm certainly not saying that too much monetary stimulus can't cause inflation. But what I'm saying is that
Say, Governor, that
you do
targeted-
your best to provide the right amount of stimulus in the situation.
Yeah. And you did say we had the deepest recession and the fastest recovery. I think if we look around the world, in which you indicated, and it's not doing Canadians any good to say we're at 7%, but when you look around the world, I think, stability is in their favor, on our side. Just recently, the Bank of Canada's number 2 official, and I assume that's you, BN Bloomberg, said our financial system will be able to weather a growing stability risk stemming from higher interest rates and inflation that's causing hardship for many households. And quickly, back to the stress test that the Liberal government brought in. The Conservative government voted against it. How is that having a positive effect now on what we're going and what we're seeing as far as interest rates?
You're talking about the mortgage stress test?
Correct.
Well, the mortgage stress test was actually, I think, implemented by the Office of the Superintendent of Financial Institutions. What it was designed to do was to make sure that Canadians who were taking out a mortgage at a period of time where we had historically low interest rates could continue to make their mortgage payments if those rates went up. And you'll remember the debate, and as you said, there was, I remember at the time, the prospect that interest rates would increase 2% seemed unreasonable. And now I think what we have is a macroprudential measure that's sort of helped us weather this period of rising interest rates. And it's helped both borrowers and it's helped preserve stability in our financial sector.
So would you consider the investments, the targeted investments that the government just recently made on doubling the GST tax credit and the one-time rent fee payment of $500, would those be the type of investments that the Bank of Canada would like to see when we deal basically with the most vulnerable Canadians, and we know that the importance of them to go forward?
Well, look, the first thing I'll say is fiscal measures are the responsibility of our elected governments and parliamentarians. Look, on those specific measures, I do think, as I said earlier, the advice from the IMF to employ measures that are targeted and temporary I think that is good advice, and this one, the GST credit, does target the lowest income Canadians, and it was set up as a temporary. So it does meet that. It does meet the hurdle of that advice.
Thank you, and thank you, MP MacDonald. Now to the Bloc MP Saint-Marie, please, for 2.5 minutes.
Oui, merci, monsieur.
Thank you, Mr. Chair. I'd like to question the link between the Minister of Finance and yourself as the Governor of the Bank of Canada. According to the Banking Act, the Minister of Finance and the Governor, I'm quoting, consult regularly on monetary policy and on the relationship with economic policy in general. This is in the Act. And so if I understand with the Minister of Finance, you have weekly meetings. Can you tell me if this is correct? This fall, did you meet every week? And here is the rest of my question. In the case where the bank and the government disagree with regards to monetary policy, the Minister of Finance can give the governor written instructions that the bank must follow. Those instructions would be published. The government would have to table these at the Parliament after having communicated to the bank, and this never apparently would have been used. So if what I said is correct, and on the weekly meetings, the only thing that I will correct is the law or the Act says that we have to have a discussion. I'm not sure exactly. It says often or regularly. So we do speak on a regular basis, but it's not each and every week. Sometimes it's more than once a week, but sometimes we might skip a week. But yes, we do speak on a regular basis. Okay, another subject to end. In the financial institutions, businesses, and individuals using fiscal tax havens to evade taxes, can you act in order to limit the use of tax havens? I didn't really understand your question. So financial institutions, businesses, and individuals who are using tax havens to evade taxes. This is really not the jurisdiction of the Bank of Canada. This is really the Department of Finance.
Now to the NDP, MP Blakey for 2.5 minutes, please.
Thank you very much. I just want to come back to this question of kind of where inflationary demand lives, because it matters a lot for the debates that we have in this place. So any, light that you can shed on that, I think, is helpful in respect to the debates that we have about fiscal policy. So for instance, there's currently a dental benefit for households with a household income of $90,000 or less. Some in this place say that that's inflationary government spending, that when families with a household income of $90,000 or less receive that money, that's going to contribute to overheated demand in the economy. There's a Canada Housing benefit targeted low-income renters of a one-time payment of $500. There are some in this place that say that's more inflationary spending by government. So it matters where that inflationary demand lives. Because if it doesn't live in households with a household income of $90,000 or less, then it's hard to believe that the claim, should anyone care to make it, that that's inflationary spending is true. And so I'm hoping, while I respect that your domain is not fiscal policy, you do have spend a lot of time analyzing the economy, and I think it would be helpful to understand better where the inflationary demand is coming. Is there a household income threshold or range within which you think those households are more likely contributing to inflationary demand than others?
I think I can ask the Senior Deputy Governor. I've given quite a few answers on inflation, so I'm going to let her give her perspective.
That's good.
Yeah, I think I know there's a very strong desire to figure out who's responsible for inflation, but it's a very difficult thing to do. It's excess demand is excess demand in the economy. To say that this demand is worse than that demand is very difficult. The only other thing I would add to the comments the governor's already made is it's important to understand demand in relation to supply. So, as we've answered this question in a number of different ways, ultimately, the pressure on prices comes from a mismatch between those two things, and you can act on both things. You can improve supply, but supply constraints bind more when there's excess demand.
What does government taking action on supply look like in a globalized economy? You know, I mean, we hear sometimes like, oh well, if the government would just get out of the way and let more oil and gas development happen, Canadians would get cheaper energy prices. But is there really that direct a line between the rate of energy output in Canada and energy prices in Canada?
Great question. We need it in a very short answer. Yes.
Look, supply is not within the domain of the Bank of Canada, but just to give you some domestic examples, I mean, the supply of housing, the supply of affordable housing, gateway transportation, that means we can get our products to market so we can sell them to the world. I mean, these are immigration. So these are supply-oriented policies that are geared and important to the Canadian economy. You're right. We can't really affect global supply chains very directly, but there are things in Canada that governments can influence.
And supply takes
Thank you.
time to help too. So there, there's a bit of a lag, and it's not a substitute for monetary policy.
Thank you, MP Blakey. Now to the Conservatives, and I've got is it MP Helen? All right.
Yeah, I'll be quick. Governor, just a yes or no. You said that the carbon tax is contributing to inflation. Would you agree cutting the carbon tax, even if it's temporarily, would that help to fight inflation? Just a yes or no.
So if the carbon tax was completely eliminated, that's what you have in mind?
Or even paused?
Okay, well, so if you take the carbon tax down to zero, we estimate that would reduce inflation for 1 year by about 0.5 percentage point.
Thank you.
And then after the year, it would have no further effect.
Thank you, Governor. Recently, thank you, Mr. Chair. Recently, the Deputy Prime Minister asked for ideas on how to encourage Canadians to spend the money that they were saving and businesses to spend the money on their balance sheets. Is that something that you're also hoping for at this point?
I must admit, I didn't see those comments, but
it's about a year and a half ago.
Okay. Well, a year and a half ago, the economy was in a pretty different situation. But
are you hoping that businesses and consumers spend now?
Look, we need spending. We need some spending in the economy, but we want to see spending slow so that supply can catch up, and we're going to take the steam out of inflation. That's why we've been raising interest rates. Higher interest rates reduce spending, particularly on things you buy on credit.
Thank you. We're coming up on the 1-year anniversary of the mandate renewal, and the mandate was slightly changed from previous versions to include another measure by which the bank should be focused. It was solely focused on inflation before, but we added, or the government, added a focus on maximum sustainable employment, whatever that means. But did that addition of, or the change in the mandate cause a delay in your response to inflation, that you had something else to worry about in addition to inflation?
I can't give you a very short answer to that one. The answer is no. The revised mandate that was agreed a little last December was really very much consistent with the previous mandates. I think what it did was it was clearer, but it was the primary objective continued to be price stability. The target continued to be a 2% inflation target, and the recognition that we care about the labor market is not something new. We've always cared about the labor market, and in fact, maximum sustainable employment and low inflation go hand in hand. If you don't have, if you're missing jobs, if you're missing incomes, you're going to be missing spending, and the economy is going to be below.
That's fair.
Inflation's going to be
short
below.
Short answer was no.
So the short answer is no.
Annual run rate spending of the government is up 30% since 2019 levels, pre-COVID. So forget about all the spending during COVID. Annual spending, 30% up. Would you classify that as fiscal restraint?
Look, fiscal spending is the role of the government, is you as Parliament. We have a very clear mandate. What we do is we take the fiscal spending decisions that you take, we take those into account, and then we take the decisions that we need to take to fulfill our mandate.
Final question, Mr. Chair. There's a lot of discussion about the decoupling of supply chains, friendshoring, if you will. How does that factor into inflation? Can Canadians expect actually that inflation will take longer to come down because we are revamping supply chain, which may lead to higher prices? Is that a headwind that you're factoring?
I think it is a headwind. And, you know, when at the outset of the pandemic, when I think we didn't all recognize how long it was going to be, we thought supply chains would come back more to normal more quickly. This pandemic has gone on for a long time. And certainly when you talk to businesses, what you hear is that, you know, they're looking for ways to build more resilience into their supply chain. They need to simplify it. They need to shorten it. They need to standardize it. That will add cost to the supply chains. Businesses are going to be holding more inventories. Their supply chains are not going to be as efficient. So that doesn't create permanently higher inflation because you know, inflation is a perpetual increase in prices. But if there's a higher cost structure for a period, that could make inflation more difficult to get down. So that is something that we're watching, we're concerned about, and it is something we're factoring in.
Thank you, Governor.
And thank you, MP
Thank you, Mr. Chair.
Chambers. And now we're moving to the Liberals, MP Chattel. And MP Chattel, you'll be the final questioner.
Thank you, Chair. Just a quick question. Quebec and BC and other provinces, they do not have, you know, the federal carbon pricing does not apply. So can you clarify what would be the cost on inflation in those provinces if, as suggested by the Conservative, there's no carbon pricing?
I don't have numbers for every province. No, I can't give you that number. I don't have the calculation by every province.
If you cancel a federal carbon pricing that does not apply in Quebec, that Quebec has its own system, it will have no impact in Quebec on any inflation. It cannot, because the carbon pricing at the federal level does not apply to Quebec. So even if you cancel the federal transfer price carbon pricing, it cannot have any impact because it doesn't apply now. Would you agree with that?
Well, certainly, you know, different provinces have taken different routes, and the provinces have the ability to impose their own measures, and so yes.
Thank you. I thought it was important to make that point because in my own perspective and that of every Quebecers, especially on the pricing of pollution, what is being proposed by the Conservative on canceling the carbon pricing, it's irresponsible and will undermine all of the effort made by the province of Quebec. The carbon pricing was made to create a level playing field amongst provinces so that one effort made by one province is not canceled by other provinces. But thank you for the clarification. Now, we were talking about, my colleague was talking a little bit about something I'm very interested in. It's the inflation on food pricing. Even if we stabilize the economy and we get to a 30%, a 2% inflation rate, what I'm concerned is that when it comes to food prices, given that many regions in the world are facing permanent drought, recurrent weather patterns that are not favorable to agriculture. We've seen it over and over in the last couple of years, and the prediction by experts and scientists are not great. You talked about a river drying and creating supply chain issues in Europe, in the United States. The Saint Laurent River had a bit of a warning last summer as well. So I'm concerned that if we do nothing on pollution and reducing our green gas emission, we'll see even more of that. And will that create a permanent inflation on food?
Well, we're not the climate experts, and the climate experts are doing a lot of analysis. So I'll leave it to them to give us, an analysis of what the effect will be on harvest. But I think, what we've seen with more variable weather patterns, we're getting more variable harvests, and that certainly does affect food prices. From our perspective, monetary policy, what I can tell you, what we're doing is we're doing a couple of things. So we need to understand that better to conduct monetary policy. If weather disturbances are going to be more frequent, that's going to affect agriculture. It could affect transportation. Those are things that we are going to have to factor in. We have been doing, because there's a lot of uncertainty, we have been doing scenario analysis. So we don't have a forecast, but you can put together scenarios, and these are based on global scenarios that have been worked out, and then we customize them to Canada. And we will be working to figure out what that could mean for monetary policy. So that is something that is on our work agenda.
Thank you, MP Chattel. And on behalf of the committee, let me thank the governor, Governor Macklem, and Senior Deputy Governor Rogers. We thank you for answering a multitude of questions, very detailed questions and very detailed answers, as we said, from all the members here on monetary policy. Members, just as I have your attention before we adjourn, on Monday, we do have the Deputy Prime Minister and Minister of Finance coming in for the first hour. The second hour, what's been suggested is we possibly have the PBO come in for the second hour, if members are good with that. I see everybody shaking their heads in the right direction. Great members. Well, we will look to invite the PBO here to our committee for Monday. And again, Governor, Senior Deputy Governor, thank you very much for your appearance. We always like having you here and answering the many questions from the members. Appreciate it.
Well, thank you, and thank you for the work that you do.
Thank you. We're adjourned.